And I'm your co host, also David, David's dad.
All right, welcome back, everybody, to another episode of The Bull and the Cub. Season 4 continues, where we're interviewing leaders in the business and financial industry, learning about their journey and how their personal journey came to success, how their business journey came to success. We're very excited today to be joined by the managing partner of Social Leverage, Matt Ober. And it's funny. I was so excited for this because one of the most exciting things for people to talk about in the business world is really how much money somebody makes from an early investment. You hear it lately with the stock market, right? SpaceX, IPOs, everything's about look how much the employees who had stock early, how much money they made. For years, we heard about NVIDIA. Oh, if you got into NVIDIA early, how much money did you make? And then, but even before that, before getting into the stock early, it's getting into, a business early with a venture capitalist or somebody investing in that business before it's even a revenue generating business necessarily. And so, and you hear it in the news with celebrities talking about, whether it's George Clooney and his tequila business or anything that Ashton Kutcher's investing in. You hear these stories. So I was really excited to talk to you, Matt, about your company because I think venture capitalism is something that is really exciting. Our listeners are really curious about and want to know how it works. So co-host Dave Briscoe is going to lead us with some questions as we get to know you and your journey. And thanks for joining us. So,
Awesome. Appreciate you inviting me.
Before we talk about your company's social leverage, please tell our listeners how you got into the venture capital business.
Sure. So I started my career out of college at a company called Bloomberg, which is you see it on the news, but they also make an investing terminal for software. And I started there answering the phones and answering the help chat for many years. And when I moved to New York with the company, I knew I wanted to work in the hedge fund space. I was really excited about like what I had learned being on the other side of the software about what people are doing in the stock market. And I got a job at a quantitative hedge fund called World Quant, which in the early days was, you know, 50 employees. We grew to 600 people. And I was brought in there to help lead the data strategy with all these PhDs that were finding signals in the market. And after, finding all these data sets that we were using, I had the idea to bring up to our founder, Igor, and say, we should be investing in these companies as well. We should take part ownership. So he actually allowed me to work with another guy we brought on named Steve Lau to start World Quant Ventures. And that was kind of the break for me into the venture space. I started investing in these private companies. We probably did 100 investments, very early stage. And it's how I met my current partners at Social Leverage. I actually cold called one of my partners, Howard Lindzon, and he was running a company called StockTwits, which he actually started, which is kind of like Twitter for stocks. And he'd started Social Leverage, and we started investing alongside him. I became an investor in their fund, and then when I joined another firm called Third Point is where they did venture as well, and I got to do deals, and so it's kind of just went all in after that.
oh, I love that. I love the like kind of hard work, get your foot in on the ground and just get in the door and just kind of grow from there with, your skill set and hard work. Well, what you seem like early on, you talked about the data part and you seem like a data driven guy and very knowledgeable in the data space. What's your educational background that kind of gave you that foundational data experience?
Yeah, it's funny. I went to Chico State, which is here in California. I actually now sit on the board at Chico State, helping think about what the future of the school looks like. But, it's just a finance background. I think for me, I landed at Bloomberg by chance, ended up winning them over in a group interview based off of something I learned when I was studying abroad. I learned about options trading studying abroad in the Netherlands, and they tried to stump me on a question, and I was the only one who answered it. And so that kind of launched me into Bloomberg. And I learned about like how powerful data is just for the markets, right? When you're investing, like there's so much information to try and think about like what's important and what moves a stock or an investment. And then when I got to World Quant, it was very clear when I was there that the thesis was if we can consume more data than anybody in the world, we can manage more money. And so I kind of saw the value of data, and that just, launched my career. This is, in the hedge fund space, there's this thing called alternative data where people use satellites and credit card data and track people on apps. And so if you think of that, but you're spending full time on that, there's a lot of interesting data that you learn about.
That's fantastic.
Well, For those who are new to venture capitalism, what is it and what does the social leverage do?
Venture capital is private investors investing in private companies. So, I think I always kind of compare it to Shark Tank. We're not consumer investors, so I'm not investing, typically in the next drink or the next, snack item. We're more technology investors. So, our firm was the first investors in Robinhood, for example, which is like the investing app. And so for social leverage, we do what's called seed investing, which is essentially the first investors. So it could be two people in their garage. They just started a company or a website. They're starting to make some money and they're looking for their first investors. That's when social leverage gets involved. But venture capital, can be anywhere from that very beginning all the way up to right before they go potentially public or right before they get acquired. So there's different levels and different strategies, but we do the very earliest at social leverage.
Very cool. Do you actively seek out startup businesses to invest in, or do the businesses in need of money come to you?
I think we're in a fortunate position that we've been doing it for 17 plus years. And for social leverage, it's always been about leveraging your social networks. That's kind of the name of the firm. So 99% of our investments come inbound from our friends, our network, founders that have been both successful and not successful. And we've kind of built a reputation for, really being good at like the domain expertise that we have, which is financial markets and also just like vertical software. So it mostly comes to us, but we do get cold emails. We have the ability for people to submit their company through our website easily. So we definitely look at all of that, but majority of it is from warm relationships.
Very cool. How do you decide whether to invest in a business? For example, is it about the product or business idea, the early revenue numbers, the person running the business, or something else entirely?
I think, I have to be interested in the business. I think for us, one of the things we always think about is, can we be a user of the product? Do we have some domain expertise or experience where we think we can be helpful? I always want to be able to think about being helpful for the founders on a daily, weekly basis. Can I help move the needle? I think when we're really making the investment, though, the biggest part is the person. You know, things happen when you're building a business. People end up pivoting. All types of things can happen. It's a 10, the best companies take 10 plus years to go public or see success, right? Robinhood took 9 years. eToro took 13 years to go public, which is another similar type company. So, I mean, people is most important. You can love the idea and love the business, but if you don't gel with the person, it's not going to work having to work with them for 10 years.
Yeah, it's interesting. I mean, gosh, you could be one of the sharks on Shark Tank from that standpoint. Like I know they do also consumer products, but you hear them talk about all the time. They like the person. Sometimes they get up there and they're like, okay, the product's okay, but you as the person running the business, and I think to me, it kind of comes back to everybody's got a story, a journey, because this is a journey season. And that's why what first thing that jumps out to me is kind of your journey about getting your foot in the door, working hard, working your way up. And you're almost looking for people who are like you, that same type of person who are grinders, going to find a way to success. Because if you're investing in their business, you want to know that they're the type of person who are just going to be 24/7, all about growing this business. And open to learning along the way, but it's that kind of grind mentality that everybody seems to be attracted to. It's neat to hear you say that.
Yeah, it's almost like it's not a job, it's a lifestyle. And I also think, it's how do you trying to find people that you can see how are they going to deal with adversity. It's never straight up and to the right, right? There's always going to be painful things that they have to deal with. Um, and trying to understand like what have they done in their life that they've had to deal with that type of adversity, and like are they willing to make sacrifices to see this thing be successful.
Very cool.
What from your experience is the success rate for venture capitalism? For instance, out of 10 companies, how many would you say turn out to be a success?
When I explain it to investors, I would say out of 10 companies, you would imagine that one or two are going to drive 90% of the returns for your portfolio. I think half of your companies will go to zero or maybe, break even and get your money back. And then there'll be another, call it, 30% that's sitting there that will still have multiples of return, right? 3, 4, 5x. But when you think about a venture capitalist at the earliest stage, like you're kind of underwriting or thinking about, can this return 100 times my money? Because when you start to do the math with all the companies that aren't going to make it, you need one or two that gets to those levels to really drive returns back to investors.
Yeah, you're looking for the big hit. Is it something that regular people can do? I say, right, because regular people that have some money and they say, I've got money, I want to invest. What should I invest in? They tend to go stock market. Even if somebody's doing very well and they're like, I have $100,000 to invest, they go stock market. And so, but is the obviously you guys are in the fintech space and that may be a little bit more niche and not for regular investors. But it is, in your experience, is it good for regular people to be looking to do some type of venture capitalist investing, or is it, hey, look, this is a very specialized area. Stick to the stock market for and index funds if you're a routine investor or learning.
Listen, I think that the markets and index investing and direct indexing is like where most people should spend their money. I think that accredited investors can invest in private companies. I think there's more and more democratization of it, but it's also hard, right? Like there's no liquidity in private markets, right? Like you don't get your money back until they get acquired or they go public. So I think there's a lot more factors to take into it. I think also with public companies, you get a lot more disclosures and regulation. And in the private markets, when you're a small investor, you might not get any information until it either goes well or it goes bad. So I think it depends on each person's situation. From when I was younger and I wanted to get into it, I definitely wrote like some smaller checks into companies, friends that were building things. And I can always tell people, if you want to get into venture investing, you'll really learn something about yourself when you lose your money, right? So
Right.
it's part of the experience, for better or for worse. Um, but yeah, I mean, listen, I think it's a good diversification for everybody's portfolio, but I think it depends on where your situation is.
What are some examples of successful companies you've supported, and what was unique about them that made them so successful?
I think I'll go back to the beginning of social leverage. So like most of these companies are gonna be more relevant for my partners, but obviously we're very well known for Robinhood. I think back when Robinhood was starting, I can just think about it from just not being the investor, but being a user. Like you had E-Trade and you had like some of these other websites, and you were paying $10 to trade a stock. And there was no such thing as like investing $10 into a stock, right? There were no
That was when I was
fractional
young. I
investments.
was like, yeah, what am I
Yeah.
investing this for? I'm losing money on every time I sell it. Yeah.
Yeah, exactly. And so like, I think when my partners Howard and Tom met Vlad and Baiju for Robinhood, it was the app was so simple and the design was so beautiful, and the idea of everything is free, was a complete game changer, right? And I think those guys also came from like working in like Wall Street for like the most sophisticated, like algorithmic trading software type stuff. So like they're very smart guys. So I think like that, and like they just knew from the people and like what they were building, like this was a big thing. And I think, you know, we are fortunate that Howard started StockTwits. So we kind of get a lot of insight in what retail people want to see and use for investing. So that was one. Um, we invested in another company called Customer with a K, which my partner Gary was actually friends with the guys growing up and had built companies with them previously, and they ultimately sold to Facebook or Meta for I think 1.2 billion, and we did the initial seed investment. And I think that was betting on the right people, people you've known for a long time, and they had a big idea. To again back to the people, and I would think even just now in our current portfolio, we have companies that we're backing that this is their second or third time of us investing in them, right? So you kind of you trust people that have done well, and you know what you're getting yourself into pretty quickly.
Yeah, that comes full circle to our topic, right? It's the people. Great idea, but the people. Yeah, we got. I mean, when we started investing with the kids when they were younger, Robinhood jumped out as like this is unbelievably easy to use, and that was going to attract. We thought, we liked it from that perspective, and so yeah, great work on that one. Go ahead, Dave. Sorry.
Yeah.
In artificial intelligence, artificial intelligence an exciting area for venture capitalism at the moment, or is the expectations of big companies like OpenAI will dominate the market?
I think it's artificial intelligence is everything in the venture capital right now. I think if you take a trip to San Francisco, it's AI this, AI that. There's questions of are we in a bubble? Kind of feels
It
like
feels very
even like
.com right now, like that kind of like
yeah.
repeat where you guess, that's all it is.
Yeah, it also feels kind of like when cloud technology was released, and it's like, wow, people are able to do so much more. Think of that like 100 times more. I think that OpenAI, Anthropic, which has Claude, Google with has Gemini, and now SpaceX, which obviously has their own LLMs. Those are the foundational AI companies, but there's a whole ecosystem and world of new companies building on top of them. And just like Amazon and Google and Microsoft provide the cloud for everybody to build companies, these companies are providing the AI services or the foundational models. There's thousands and thousands of companies built on top of that. And so, as a venture capital investor, I would say in our new portfolio, 80% of our companies are AI, from the ground up for X. There's very few that are anti AI. And, in financial services, you might be able to get away with that. But at this point, if you're not using AI as part of your tech stack and the ethos or culture of your company, you're probably not building something for the venture space.
Yeah, that's really interesting to hear that it's, while the attention in the news is the Anthropic, OpenAI, the big AI companies, it's really what are the companies that are using AI in a way that's going to allow them to succeed. That's great to hear. Go ahead, Dave.
One last question before we get to the rapid fires. How should someone start investing if they had $10,000 to invest?
I think they should open up a Robinhood or similar brokerage account and start to invest in indices, and then start to invest in companies that you understand, right? I think I have a good friend named Chris Camillo who runs a YouTube show, dumbmoney.tv, and he always talks about social arb or social investing. Whether you're young or old, there's brands and there's businesses and companies that you see in your everyday life, right? Remember, like I always saw all my friends eating at Chipotle all the time. Right? It was a public company. Great example of something you can do. I think, there's a trend in a sneaker, or there's trends in clothing, or coconut water is very big right now, and Vita Coco is a public company. So I think that's what I would recommend. I do think that majority of people should just have their money in SPY or QQQ and be indexed and just let the index run and uh, understand how to be patient.
No, it's great advice. I mean, my corporations class in law school, the first thing they told us is we start. That's when I first started really learning about investing, and they said the same thing. It was find companies you like because, and look around day to day life. The companies you like, other people are like as well, and those are companies that are doing well. They're good to invest in. Aside from, of course, S&P 500 and SPY. So that's great advice. All right, Dave, you want to tell Matt how the rapid fire round works?
Okay, so for the rapid fire questions, it's basically I'm just gonna ask really quick questions. They're like usually like a multiple choice answer, like a few word answers, and I'm gonna be going through a few of them.
Cool.
Stocks, real estate, or both?
Both.
Best place for trusted stock market news?
Fiscal.ai.
Whose videos on investing do you watch personally, if any?
Dumbmoney.tv.
Most overhyped stock sector right now?
Semiconductors.
Most underappreciated stock sectors right now?
Data and information services.
And who is your favorite shark on Shark Tank?
Either
Cuban or Mr. Wonderful.
Yeah.
Mr. Wonderful.
That was a big debate in our house earlier. So yeah, it was the best one.
Mr. Wonderful has a nice watch collection, which I'm a watch guy, and he tells it how it is. But Cuban is the realistic one there, and probably the only one that actually does like more venture type investments as well. Like I see him in investments that we would make, so appreciate what he does.
Very cool. Let me throw one more in here, which is, so if you're we had a lot of young people listening to our podcast that want to, that are learning about the different even options for them in the business world. If they, are somebody who loves, hearing about venture capitalism and wants to get involved with venture capitalism, what would you say to a younger version of yourself that wanted to get, go down the path you went, and what's your best advice to them to get there, to become a venture capitalist?
I think the best venture capitalists have operating experience. So I think the goal should be is to get a job at a great company when you graduate and, get real experience and create and have a domain expertise. Because I think, at the end of the day, the founders are also picking their investors, right? The best companies with the best founders are getting to pick the investors that they think are going to be the most helpful. And you have to bring, experience. So I think, it's always hard to be right out of school being a venture investor because money at this point, lots of people have money, but not a lot of people can actually help or roll up their sleeves and do work. So I would say that. And I think it's like find what area that interests you and become an expert in that, that space. And you don't have to write $1 million checks to be involved. You can start to follow the companies that interest you, and a lot of them will let you put in a small amount of money or be an advisor and, really get hands-on into that. And then at that point, you'll figure out if you want to be doing it full time.
Great.
Very cool.
Yeah, great advice. Anything else, Dave, from Matt?
No, that's all.
Well, thank you
Awesome.
so much for joining
Thank
us. This was really a treat for us to have you on, treat for our listeners, to learn more about your space. Congrats on all your success. Thank you for sharing your journey with us. Appreciate it.
Yeah, thank you for having me, guys. Appreciate it.
thank